As Bitcoin becomes overpopulated and out of the reach of small volume investors due to its high price, the demand for other cryptocurrencies, commonly known as altcoins, has increased significantly. This reflects in the increasing market cap and prices of tokens like $ETH, $SOL, $BNB, and $Link. For a small volume investor to make a fortune in crypto, trading in altcoins is a must. The growth opportunity in altcoins is way higher than in Bitcoin. The previous bull run is proof of that. 2021 was undoubtedly the year of altcoins, with tokens like $Doge gaining over 7,500%. And before you say $Doge is another meme coin, even fundamentally strong tokens like $Sol provided $9,000 plus in returns. Gaming token $Sand was the best performer, with over 15,700% in returns. So, let's talk about trading altcoins like an expert. There are two benefits of trading in altcoins compared to $BTC. 1, they are more affordable, and 2, the growth potential is substantially higher. However, altcoins are more volatile than Bitcoin. Therefore, it is a high-risk, high-reward game. An expert trader minimizes the risk and maximizes the profit. There are two types of trading as far as the time frame is concerned: short-term and long-term trading. Short-term trading. Short-term trading is when an investor buys a token and holds it only for a few minutes, hours, days, or weeks at max. The goal is to make a quick profit and reinvest that into some other token. But, short-term trading demands a lot of dedication and time, as you have to pay attention to the price movements on charts. Seasoned traders often enter short-term trades to maximize their gains. However, the risk involved in short-term trading is comparatively higher. Also, it would help if you had a large capital to make a sizable profit. Thus, it might not be an ideal strategy for beginners. Long-term trading. Long-term trading, on the other hand, is more suitable for beginners as you can start with a minimum amount of capital. With long-term trading, you can stay in a trade for weeks, months, or even years. Consequently, the risk involved is minimal, as you can easily negate the impact of short-term downturns. The idea is to invest in fundamentally strong tokens and stay in until you book the expected profit. However, you need to identify the highs and lows in the price movement of a token to perfectly time your entry and exit. In the end, it all boils down to educating yourself. To identify fundamentally strong tokens, you must master fundamental analysis. That's how expert traders identify projects early to maximize their profit. Also, you must master the art of tracking price movements to book profit in time.